Hey guys, welcome back to Finance for Future. In today's video, we're going to break down one of the most common investing questions, mutual fund versus ETF. Which is better for beginners in 2025? They might sound similar, but there are some major differences that can decide how fast your money grows. So let's find out which option fits you best. What is a mutual fund? Let's start with the basics. A mutual fund is a pool of money collected from many investors, which a professional fund manager invests in stocks, bonds, or other assets. When you buy a mutual fund, you're not buying a single company's stock. You're buying a basket of investments, diversified and professionally managed. For example, let's say you invest in the ABC Growth Fund. That fund might hold shares from 50 or more companies. So automatically, you become a part owner of all those businesses without needing to buy each one individually. In short, mutual fund equals managed by experts plus diversified portfolio. What is an ETF? Now let's talk about ETF. The exchange-traded fund. An ETF works similarly to a mutual fund. It also holds a collection of assets. But here's the twist. ETFs are traded on the stock exchange, just like normal shares. You can buy or sell an ETF anytime during market hours. Most ETFs track a market index, for example, the S&P 500, the Nifty 50, or Bangladesh's DSEX index. So if you buy something like a DSEX 30 ETF, you're investing in the top 30 companies of that index in one single click. In short, ETF equals real-time trading plus low cost plus transparency. Section 3, key differences. Now that we know what they are, let's compare them side by side. Mutual funds are usually actively managed, meaning a fund manager makes decisions. ETFs are mostly passive, tracking an index automatically. Mutual funds are priced only once a day after the market closes. ETFs, on the other hand, trade all day long, so prices move in real time. Expense ratio? Mutual funds are generally more expensive because of management fees. ETFs, much cheaper. Liquidity? ETFs win again. You can sell instantly. However, if you want automatic investing and don't want to bother with trading, mutual funds might feel easier to handle. So in summary, mutual fund equals simplicity and management. ETF equals flexibility and lower cost. Section 4, which is better for beginners. Here's the million-dollar question. Which one should you choose in 2025? If you're a beginner who prefers a hands-off approach and you'd rather let experts make the investment decisions, then mutual funds are a great way to start. But if you like more control, want lower costs, and enjoy the flexibility of buying or selling whenever you want, then ETFs are perfect for you. Especially in 2025, index ETFs are booming. They're simple, low cost, and have delivered strong returns over the years. Section 5, ROI example. Let's look at some real numbers. Over the last 5 years, many ETFs have produced average annual returns between 10 and 12%. Most actively managed mutual funds, however, have returned around 8 to 10%. But remember this rule: past performance does not guarantee future results. Always invest according to your own financial goals. Section 6, final verdict. So here's the final verdict. Choose ETF if you value flexibility and low fees. Choose mutual fund if you prefer stability and professional management. Both are great options. It all depends on your style, risk tolerance, and long-term goals. If you found this video helpful, don't forget to hit the like button, share it with your friends, and subscribe to Finance for Future for more investing and personal finance guides every week. Comment below, which one do you prefer, ETF or mutual fund? See you in the next video.